So is it possible to use your wealth to become a better dad, a better mom, spend more time with family, or do things that you value more? Well, my friend Lee Yoder is here with me today, and he's created really a platform around how do you become a better parent or a better dad by using financial freedom and by using real estate. So welcome, Lee. How are you doing today?
Bronson, I'm doing great. Thanks for having me. Excited to be here and talk to you today.
Awesome, man. Well, I really appreciated getting to know you, just your heart. I mean, we have we're both people of faith and obviously, have similar values as far as you really wanted to have a strong family and wanted to being a good dad and how that's important. I know to a lot of people that are joining and that are listening, but I wanted to kind of get in a little bit of your story. Then we're going to get into that. But why don't you tell us, I know you started as a physical therapist. I also worked in the medical field for a while, and maybe just take us through your journey a little bit and how you got to Threefold Real Estate Investing, like how you got where you are today.
Yeah, absolutely. I'd be happy to tell the story because I think people can resonate with it. I've done nothing special, but yeah, my wife and I really had a heart for, just life design, living the life that we felt like God was calling us to. So when I was doing physical therapy, I was actually a home health physical therapist. So I'm driving around to elderly people's homes that can't get out to do physical therapy. And so I'm seeing like 4 or 5 people a day. I make my own schedule. I'm sitting just talking with folks, we're doing light physical therapy. It's easy stuff. And so I had just a nice steady job, paid plenty, for us. We don't have high cost of living. And so for my wife and like my family, honestly, my wife would have been cool with me just doing this job forever. It was just a great job for our family. The problem for me, Bronson, was like, I was just bored out of my mind. I mean, to be honest with you, and maybe that's a little bit extreme, but after a while, that's what it felt like. I just felt like this isn't what God created me to do. The company I was with, I didn't really know when I came on, but they were actually a startup staffing company, medical staffing company. And so they asked me to come into the office and run more like a clinical director. And so I jumped at that opportunity because I needed more. I was not fulfilled by my work. That's what we're doing, especially if you're the breadwinner, that's what you're doing a large part of your life. So I want to do something fulfilling. So I'm like, yeah, I want more responsibility. I want more, action. It's just something to challenge me and be fulfilling. So came in as a clinical director, started moving more toward like a director of operations. Pretty soon I was doing no physical therapy at all. I'm in the office 100% of the time. And I'm doing more like operations, building this division. I didn't know I was kind of had an entrepreneur spirit in me, but started feeling some of that. And so now, Bronson, I'm like really enjoying my work. I'm challenged by it. It's an exciting work environment amongst a startup. I'm fulfilled by my work, but now like it's kind of flipped. It's not good for my family. And it's okay. And that's fine for a time. Not that like we couldn't have, followed Christ and all that and raised good kids and that, but after a while, we're starting our family too. That's a hard time. My wife's staying home with 2 young kids, babies, and that's difficult. So she was ready for me to be home and help out in the evenings. And with a job like that, when you're trying to climb the corporate ladder, often it's like just more and more time. And I was actually moving toward a promotion, and it was going to require more time. And I felt like I was already giving, and hopefully things are different today, Bronson. Maybe today is as good a time as any to kind of do what I end up doing and have some margin, start a real estate side hustle. But at the time, you had to be in the office. It was like, you're going to be in the office, and now you're going to take the promotion. You're going to be office even more. And so I was trying to leave by at least 5:15 to get home around 5:30, 5:45. And it was like, yeah, you're not going to be doing that anymore. So that was a line in the sand for me where it's like, no, I'm not going to miss dinner, every night. Yeah. And I'm already getting up really early, and I'm not going to work weekends and stuff like that. Or not work away from home on the weekends. So I started kind of exploring things like, how can I, is this my choice to have a job that's good for my family, but I don't enjoy, or a job that I really enjoy and is challenging, but it's not good for my family? And a buddy of mine, he's actually my partner today. He was working with me, helping me build that division. He handed me a real estate book. It was kind of an obscure real estate book, but then, kind of led me to Rich Dad, Poor Dad. And that was, a light bulb moment for me, like a lot, where I thought, okay, maybe I can have the best of both worlds. Maybe I can have work that's fulfilling and challenging, but I can also control my time so that I can be the Christ follower, the dad, and the husband that I want to be. And so I end up leaving that corporate job, took about a 30% pay cut, went back to home health physical therapy, where it's a steady job, but kind of boring and not challenging, and plenty of margin. Frankly, I wasn't even working 40 hours a week, and I can start real estate as a side hustle. So I did that, and the real estate has just grown and grown, and I've poured a lot into it, to where it's become what I'm doing full time. And I really kind of have achieved what I was hoping to achieve with some challenging, exciting work, but I also control that so I can really give the time to my faith and my family that I want to.
Yeah, I love your story. I love that you shared that because I can relate with a lot of it. I actually used to work, in the medical field. We had a physical therapy device called DynaSplint. You may have heard of that we did
absolutely.
for people. So we'd work with home health therapists like yourself. You had some flexibility there. Then you went into more of a corporate job because you were a little bored. And I could totally relate because there's a lot of people out there, and I've seen it, where they're highly skilled or highly curious or highly driven. And it's the only way a lot of times to do it is there's kind of this corporate model where, like you said, the more like you want to move up, the more you have to work, and you really don't have control over your time. And then I think what I realize is probably similar to you as well, is that, you're making all this money for the company, but yet you're not sharing in a lot of that upside. Maybe you're sharing it a little bit more, but the company's doing really well. Yeah. And so, it's really challenging. I think a lot of people, and especially when you have young kids and you've got a wife at home and whatever, it can be really challenging to be like, okay, now I'm going to change things, or I'm going to quit my job, or I'm going to just basically do more work to try to, get to where I can do less work. And I can relate with that because for a while I was doing both too. I was doing the medical sales and the consulting, and then I had my real estate business. I spoke with 1,000 investors over an 18-month period. It was hustling. And so that's what you were doing. But so I love that you shared that. So I guess, for where you're at right now, I imagine you're still doing some therapy stuff as well? Or are you you're full-time? Okay. Yep. So how has that transition been for you? And I didn't realize that you're doing that full-time now. Like, how has that been for you? And now you mentioned you got a 90-unit deal you're working on right now, but just talk a little bit about kind of how that transition goes. I think a lot of people say, I want to be here. I'm not there now, whether you're like, I want to leave my great job. I was making over $200K a year and I wanted to leave. I just couldn't quite see, how do I get from here to there? And some people like go to a real estate seminar, they quit their job, take out a loan, they do a mentorship program, and it's like, oh my gosh. Other people wait till they're a month short of retirement and they're like, yes, I quit my job and financial freedom. But so take us through that journey of how you kind of bridge that and how you were able to leave your job.
Yeah, well, great question. And I think it's the right question. So I had a buddy, when I was at the corporate job, I had a buddy that was doing real estate full time. And he said, Lee, can you do your job from home? Can you get more flexibility? And I said, no, I can't. And so that, Bronson, is what led me to go back to home health. Was like, well, right, there's a job where I have. So that would be my first thing to people, is like, if you want to go, can you take a demotion? Can you do a different job? Yeah. Can you do your job from home? Is there something you can do? And maybe the answer for a lot of people is no, but again, with COVID and from working from home, maybe this is more of a possibility for people than ever. If you can, because a lot of times just working from home, you can be efficient and maybe get a couple hours in the day where you can do the real estate side hustle or something. So I think that's the first step. That was the first step for me, was again, kind of taking into motion. I guess I was making less money with a job that had the more flexibility and more, didn't require as much time, so I could put some time into real estate. So that was a first step. Maybe that's a first step for a lot of people. And then I started building a portfolio. I started with small multifamily. I love that way to start. I didn't have a bunch of money at the time. We were still young and young in our careers. And so didn't have a lot to set aside to be a passive investor. That can be a great way to get some cash flow going. Start as a passive investor, which, you help so many people do, Bronson. So maybe you can kind of get that going. But I started building a small multifamily portfolio, just doing little joint ventures. So I did a 16 unit, an 8 unit, and a 10 unit. And I was about halfway to my goal, Bronson. And the goal being what some people call first level of financial independence, where the money from the properties that I owned, that monthly income that you get. And I had third-party property management, but that check they sent me every month, I was like halfway to just covering my expenses. Yeah. Okay. So for me, low expenses at the time, like 60 grand a year is what I was looking for. So I was about 30 grand a year with 34 units, just joint ventures. So I own 50 to 55% of them, just brought in one or two, money partners that JV'd. So I was halfway there. I didn't want to wait. So I could have kind of doubled that portfolio and kind of been there. And then that would have been a good point to quit. So I think that's what a lot of people try to do. And that's a great goal. Again, if you can mix in passive investments, somebody like you, Bronson, and different people that maybe you were a high income earner for a long time and were able to stash away a couple $100 grand. Put that to work for you. Yeah. Or just your own deals and you own more of it because you're putting in your own money, things like that. So build up that as much as you can. For me though, Bronson, I bought those 3 at the end of 2019 and the market kind of went straight up. We put a lot of work into it, but we timed it right. So I actually sold all 3 of those at the end of 2020 and beginning of 2021, and just had enough equity there where it kind of gave me like this 3 to 4 year runway. And it kind of gave me that, basically that 60 grand times 3 or 4, where it's like, I told my wife, hey, I want to quit now because I want to do this right now. If we put this in the bank, it's like, I've got 3 or 4 years to go make this happen now.
Yeah.
And that's if we do nothing for 3 to 4 years.
Yeah.
Like I can't find a single deal. 3 or 4, and hey, it doesn't work out. I go back to therapy. Right. So I think that's what a lot of people, maybe they don't think of that piece, Bronson, where it's like, there's jobs out there. Maybe you don't get your dream job again. So it's something to think about. If you have a great job and you're like, shoot, I couldn't get this back. Okay. But maybe you give yourself a runway. Maybe you get a small portfolio going and then you take a jump. And if it doesn't work out, you can go back. That was kind of the thing I had.
You said so many things there that I want to touch on. And I think this is relevant to anybody who's passive or wants to be active, because this is exactly what I did. Is I tried to figure out, if I'm making 200K a year, what do I actually need to live on? And I realized it was more like 60 or 70K. And if I could, so what I was doing, and I actually almost left my kind of like consulting job before COVID. And then COVID happened. I was really frustrated and whatever. I was like, how is this going to mean for real estate? But I held on and it gave me that flexibility. So a lot of people think it's kind of all or nothing. Like you've got to either do this. And I know actually, if you know Savannah Arroyo, the net worth nurse, she did something similar. She was in a nursing administrative role. She kind of basically took a demotion where she went down to become more of a per diem nurse, or kind of like an on-call nurse. And she was able to do it part-time. And it was kind of like she had more time to focus on her real estate. So to me, once I got where I was having passive income that covered my living expenses, that's really when you're free. I mean, Robert Kiyosaki, the book, I have the game over here, the Cash Flow 101. It's like when you can cover your living expenses, that's really getting out of the rat race. But a couple of things we have to do, we have to identify what that number is and be modest on it. And the more modest you can live to do that, the more you can actually become free of your job and to be able to leave. So for people that make a lot of money, and we have people that are physicians or business owners or CPAs or all kinds of professionals, and they make hundreds of thousands or even over $1 million a year, but they realize they don't have to make $1 million to leave their job. Maybe they realize their living expenses, they can kind of get a nest egg like you did, 3 or 4 years, then they can start investing in stuff. And I always say the biggest thing people can learn is what you learned as well, is the confidence that I can invest in this thing, whatever that is, and I can hopefully double my money every 5 or 6 years. If you can do that, once you can kind of prove it to yourself and to your spouse, and you kind of show it, then it can really open up a lot of doors. So I love that you talked about that, because I think that's a lot of times people are wondering, how do I actually bridge that? So talk to us a little bit. So you basically did some small multifamily. You did it yourself. I did a little different. I raised up some money and kind of went to some larger stuff, but you were able to, obviously the market's done well. So talk to us a little bit about, you transitioned from that and you started doing some larger multifamily, right? So you've kind of been doing some larger stuff now. Can you talk to us about that transition? Because again, you transitioned from kind of like doing your job, then you've got this runway because you sold these properties and you paid off pretty quickly. And so now you've got these larger deals. So how has that transition kind of been for you going into larger deals?
Yeah, I think there's definitely 2 ways to do it, Bronson. If you want to go big, hey, jump in right away. You can do that through partnering. You can start passively. You kind of do it more like you. I just kind of did the stair step method. So I skipped a couple steps. We flipped a house first. That was our first one. Then we did a duplex and did that on our own. And so after the duplex, we did a 16 unit. Hey, we don't have enough money to buy that on our own. So we brought in one close family member, actually my in-laws, and they brought the money and partnered with us. So we got the 16 unit. 8 unit was with a buddy of mine from church. And then the 10 unit was with that same buddy and my parents. So just a couple partners on those JVs. And so then the next one was a 45 unit, and we needed, 2 to 3 times as much as I had raised on any of the other deals. So it's like, we're going to need more, but it was still just 7 people. So some of the same people that partnered on those others, because we sold them, so they had their money back. So that always helps to get your investors back when you recycle their money. And then, but brought in a couple other people. One thing I did to help Bronson was I joined my local RIA. So a couple of the people that invested in that that was our first true syndication, was the 45 unit. A couple of the people were from the RIA. Again, they're just family and friends. The next one was a 47 unit, but it had a much bigger rehab budget. So that 45, we had to raise 550,000. The 47, we had to raise 1.3. So that was a lot more people. That's 23 investors, I think, on that one. Okay. So, and then the 96 unit we just closed on in December was more like 25, 26 investors. And we raised 1.65. So just kind of stepped it up. In each one, you need to know more people. But as you gain traction and as you get a track record, that always, I'm building a track record this whole time and being able to go to people, but I'm networking the whole time and people are kind of seeing what you do. And some people want to sit back and watch you do a few deals. And, we were able to go full cycle on a couple. So just kind of stepping it up, just each time, little bit bigger deal, a little bit more raising. So we brought in more investors because we knew more people. And it's kind of just really, we've started to see some of that organic growth too, where now our investors are even telling other people. And so they're coming to us and saying, hey, so-and-so is investing with you. I'd like to look at it too.
Yeah. It's amazing how it is in the beginning. People don't know you as real estate Lee, right? They know you as a physical therapy guy. Like it's almost like if you're a mechanic that fixes your car is like, hey, I do real estate now. Give me $100,000. You're like, well, it doesn't really make sense because you fix cars or you're a physical therapist. Like it just doesn't make sense. So like telling the story, and you've done a nice job of telling your story, adding content and really kind of getting out there. And it's amazing. When I first started, I had like something like 63 phone calls with friends and family or in-person meetups, and I had absolutely zero invest. but since then, that was years ago. Since then, I've had a number of those invest, and then now it's getting to where people are telling people about it. We're having good results. You have exits, and so it's just amazing. It really is like a snowball. Things start to go. So if you treat people well, if you're a person of integrity, and I think this is also as a passive investor, what you're looking for is really 1 to 2 groups that you can really develop a relationship with and just do deals with them. I have investors, and I'm sure you do as well, Lee, that invest in every one of our deals because they've realized like there's actually a good fit there, right? It's not that we're the best ever or you're the best ever. It's just that not every person has the same goals or they like the same style of communication or that kind of thing. And so that's why I love doing podcasts like this or shows like this, because people get to know you, they get to know who you are and they feel comfortable with you. And I remember when I kind of found out from a partner that I had somebody that I partnered with, I felt like I knew him because I spent hours with him on these shows, right? Because I'd never met him, but then he was a little taken back when I met him. He was like, hey man, how's it going? And he just was like, you didn't realize that, but what you're doing is you're adding value and you're getting value. So I think that's awesome how you've done that. Talk to us a little bit about multifamily as an asset class. Like what is it about multifamily that you like or that made you really focus on multifamily? Because there's a lot of stuff out there in real estate, but can you talk a little bit about some of the benefits you see of somebody either actively or passively doing multifamily?
Yeah, well, for me, actively, Bronson, like I said, I kind of went through each step. So it's the scale that it offers. When you have so many units on one property, it's easier to manage. So even if you're paying the same amount for management, I think you just get better management the more units you have in one area. It's easier. We use third-party property management. I realize that the more units we have in one area, it's easier for them. So they're going to be more efficient. They're going to make more money at it, which I'm fine with. I like that. I want them to do well. So it's better for them, which makes it better for me. There's just a scale there too, as far as like when you're adding value. So, you increase rent by $50. I mean, it means a lot more on a 100-unit property than a 10-unit property. For me actively too, I just, when I got those 3 properties, I was like, okay, this is 34 units. Let's say I want to get, 1,000 units someday. I don't want to own 100 properties. I want to own 10. And so that it's kind of a simple way of thinking about it. But for me, it's just every deal you do, it's a lot of work. It takes, people will say that and it's pretty true. Closing a 10-unit deal is not that much different than a 100-unit deal. Yes, you have to raise more money, but other than that, there's really not much of a difference. Your inspection day lasts a little bit longer because you inspect 100 units for 10, but just not that much, especially once you close on it. The property, it's different for the property management company, but you just pay them more. So that was a lot of it for me. I think as a passive investor, I think you just look at the economies of scale and the property being able to be run more efficiently. And just where, hey, a little vacancy here and there doesn't matter as much because you got, so many units. But you want to make sure you've got a good operator because it does take a lot to operate a property well. But those are some of the things that I like about big commercial. I mean, just commercial multifamily in general. I love the fact that there's no technology that's going to take it away. People are always going to need a place to live, and there's you educate very well, Bronson, as good as anybody. But the importance of leverage, the inflation hedge it is, and things like that. I'll let you do more of that. But those are some of the things I like about it, and I think what our investors like about it.
Yeah, no, it's really a good point. I mean, I had single family houses. I had about 4 or 5 of them. And I had a cousin who's been doing multifamily for years. And I said, he's like, why don't you do multifamily? And I said, well, I'd love to, but I don't have the money. He said, you can raise the money. And then I realized it actually just becomes much more efficient. I would say it's even easier. So our first deal was 225 units. And when you get to be even from some of the smaller multifamily 10 units, you get up to 100 plus units. you get better management. You get more people dedicated to the property. In some ways, it's easier. Obviously, you have more at stake where you're raising more money. There's more investors involved. There's more things that could potentially happen. But in the other hand, it's just, it is a deal. And I think there's something that, there's a guy named Dan Sullivan who does strategic coach, and he has this idea. A lot of people think, would it be easier to 2x my business, to double, like make it twice as big, or to make it 10 times as big? And his belief is actually it's easier to go 10 times larger than it is to go twice as big, because if you go 2x, you're thinking, okay, instead of working 40 hours a week, I've got to work 80 hours a week. And you basically just be doing everything twice as much what you did before. When you grow 10x, you have to be thinking in terms of scale. You have to let go of about 80% of the stuff you were doing and just start giving things away and trust a team. And it's hard. If you're somebody who, I know you're somebody who really cares about people, and you seem like, I say of myself, I'm kind of a control freak. I want to be in charge of everything and I want to do well, but you have to learn to trust a team. And that's why multifamily really is a team sport, which is great. So let's talk a little bit about just, kind of your process with multifamily. There's this saying that when the student is ready, the teacher appears. And so what are some things that you wish you'd known a little earlier about multifamily?
Well, yeah, just thinking about a teacher, Bronson, I wish I would have networked even earlier. The RIA has been so good for me. I found a mentor there. There was a guy leading an apartment focus group. And once I met him and started going to that and networking, it took off for me. I mean, he's the reason I was able to do the 16 unit. He started teaching me how to underwrite, gave me the confidence to do it, gave me referrals for, good property management, things like that. So I think it'll just open your eyes to what's possible, because you see somebody and they just kind of, I did that. And you realize they're just an ordinary person, and what they did was nothing special. And so, okay, I can probably do that. So I think that's the one thing I encourage people to do a lot of. I don't, for me, I would start at your RIA. I would start there. Don't spend a bunch of money yet. Go and see what you like, and interview people, get to know some people, start underwriting, see what you like. But that was key for me was finding a coach, finding some people that are doing what I want to be doing.
Yeah, we always say, I actually run a local meetup here in Pasadena, California. And so we talk with investors all the time, but this is like at every single time we say the two things that'll help you get there are networking and education. And you get both of those at a meetup or at a conference. So the idea that like you went there, you developed some relationships, and people really helped, and we kind of became mentors and gave you resources and things you could do. And that's really what happens, kind of the magic of what happens. And I've realized when you go to groups, you're just going to meet all kinds of people that do all kinds of different things. You're going to get new ideas. There's usually some educational topic. And really, that's the only thing that separates us. There's this guy named Tommy Tremendous Jones, and he says, you'll be the same in 5 years, except for the books you read and the people that you meet. And so that's the idea of networking and education. That's exactly what you did. So I love that you did that. I love that, how it worked out for you. Lee, let's shift gears a minute here. I want to talk a little bit. We talked about a little of this before we started the recording, but talked about today what's going on in multifamily, right? We've got, it's getting harder to find deals. And we just said, we don't know, is it going to keep going the way that it's going? And, it may even make sense at some point to overpay, but you and I, we like to be conservative. We don't want to overpay. But then we have, all this money printing. 40% of all the currency that has been, is in existence was created within the last 24 months. So that's kind of the other thing that's a little different from all this. But where do you see things going? Where do you see kind of demand for apartments, apartment investing, cap rates, any of that stuff? Just any thoughts that you have on any of that?
Sure. Yeah, I really geek out on the macro stuff, and that's why I like some of the webinars that you put on, Bronson. I attend those a lot. I like a lot of those guys. You bring on some awesome people in the macroeconomic world, and so I love this stuff. But I'll tell you, I don't know, and most of those guys that are humble enough, say the same thing. But to me, Bronson, basically there's two options. Either we keep experiencing inflation, and the Fed maybe reverses course on raising interest rates, and like they did in 2018, and they go back to just, hey, we got to keep them down because we have too much debt. And by the way, we're going to start increasing our balance sheet again. And if that happens, then we probably see continued asset inflation. Stock market probably keeps going up. Prices of apartment buildings probably keeps going up. So we'll be glad that we bought, even if we did overpay a little bit. The prices will go up and all that. So that could totally happen. Honestly, I don't think it's the best path forward long-term for our country and things like that, but it could totally happen. If they don't, and if they're serious about taming inflation and raising interest rates and, decreasing their balance sheet, they have stopped with the purchases, but they haven't decreased their balance sheet yet, the Fed. So if they start doing those things, then maybe we could have a deflationary crash. and maybe the stock market continues to drop. I mean, it's been a rocky year so far. Maybe it drops a bunch. And so maybe, I mean, I think people in the multifamily space, I mean, honestly, I haven't experienced this yet, Bronson, but rents can go down. Occupancy can go down. Prices of apartments can go down. So I'm always trying to think that is a possibility. I mean, I read Howard Marks, Mastering the Market Cycle.
That's a great book.
And every time he talked about the .com bubble, I'm like, man, that just sounds like today. I mean, people want to say, oh, we won't have '08 again. Banks are okay. Yeah, no crash looks like the last one. It doesn't mean like asset prices don't come down, right? It doesn't mean that we can't have another crash. But man, a lot of it he was saying about the .com bubble seemed like very reminiscent of what's going on today. So I do think we could have a deflationary crash, which would be bad for multifamily. What I would say, Bronson, for me, the reason I keep moving forward is because number one, I don't know which one of those it is, but I would say regardless, I still would feel good about getting my investors to put money into our deals, because a lot of times they're deciding against, do I keep money in my savings account? But most of the time, honestly, it's, do I keep money in the stock market? It's deciding between us and a different investment, because you got to put your money somewhere for the most part. And I think, again, if we keep having inflation and the Fed reverses course and prints more money and all this, we're going to do really, really well. So they're going to be very happy that invested. They're going to do good in the stock market too. If we go the opposite route, and if we do have a deflationary crash, if things get ugly again, if we have bad things happen, then I would say, to be honest with you, Bronson, we probably will not hit our projections. Okay. We probably won't. Maybe we won't even be able to get the 8% preferred return. And I'll tell people this. I have this conversation. If things get really bad, we may not hit our projections. We may not even hit your preferred return. Heck, there's maybe some years that we have to buckle down enough. You don't even get a return. But I am very confident we will not lose any money. I don't care how bad it gets. You look back at some of the stats, the foreclosure rate among commercial multifamily was very, very low, right? 1/10 of what it was in houses. So I'm very confident we'll hold on. Meanwhile, if we have that scenario, I think you've lost 50% in the stock market. So I'm going to feel like, even though I'm not meeting my projections and I'm not hitting that return, maybe we're only giving you 4% return, we're going to be by far your best performing asset. So for that reason, we keep hunting for deals. We keep buying. We keep encouraging people to invest in multifamily real estate, because I think either route we go, you're going to be glad you have money in multifamily.
Yeah, and I think you brought up a lot of great points. That book, Mastering the Market Cycle by Howard Marks, a friend recommended that to me. And it's like the idea of the pendulum, that the further the pendulum swings one direction, then the further it has to swing back the other way. And right now with QE, Infinity, all the things that they're doing to try to stimulate and grow, and COVID and whatever, we haven't really felt the pain of any of this stuff. There's been some inflation and other things, and they have an incentive to really understate what inflation really is. But I do think long-term, there's going to be more and more demand for apartments. And I think that with the monetary base increasing and to be able to get debt at such low rates when inflation's already higher, I mean, it's just like every single thing is going well for that. The only thing that could happen, and it depends where you buy. So if you're buying in areas where population is shrinking and there are, some risks there. But I think the important thing is whatever you invest in, whether it's the stock market or real estate or whatever, just you have to continually look at your downside, right? Like Warren Buffett says, rule number one is, don't lose money. And rule number two is don't forget about rule number one. And so it's just like so important. If you can just not lose money, and we said, hey, we're at least we're not going to lose money. So I think that's a huge, the upside is huge. So Lee, this has been great. We could talk, I'm sure, at macroeconomics for hours, because I know you're kind of the same, persuasion and everything, just to kind of really research all this. But what's one resource that's really helped you in your journey, whether it's an app, a book, a website, a tool, or something you can share with our audience here?
Yeah, I would say the biggest thing for me was the RIA. And you've got to learn underwriting. That's what I learned from the guy leading the apartment focus group. So there's different coaching programs, different groups that will offer an underwriting spreadsheet, basically is what it is. You've got to learn that if you want to be active. If you want to be active like I did and like many others do, you've got to learn to underwrite deals. And honestly, if you want to be passive, I would learn to some degree how to kind of underwrite deals and understand that. And underwriting just means, deciding what the income and expenses are going to be for a property. And so that's the one thing that I would encourage people to do. For me, it was the RIA that taught me how to do that. But I would just encourage people to figure out how to learn, to underwrite deals if you want to be active.
Yeah, absolutely. No, underwriting is, I think, yeah, whether you're asset or you're active or you're passive, it is really important because you have to understand what you're investing in.
Yeah.
Well, Lee, I wanted to just appreciate you for coming on the show. You're obviously very well spoken. You're a person of values. You really add a lot of value to the community, and your story is very inspiring. I know it's inspiring to a lot of people and to me as well. So I appreciate all the value that you bring. And I know you're continually putting out content, continually trying to really help people to get where they want to go through your investments and kind of adding people to your network. But if people want to reach out, what are some ways they can reach out to you?
Yeah, I appreciate that. Appreciate the kind of words, Bronson. I feel the same about you with everything that you put out, and I'm always following your stuff. I'm active on LinkedIn, so look up Lee Yoder on LinkedIn, Facebook as well. And then just check out our website, threefoldrei.com. We talked about, and you and I talked offline too, just our passion for being good dads and stuff. At our website, we have a free ebook called The 5 Steps to Passive Income for the Full-Time Dad. And we're just it's for moms too. But my partner and I both dads. And we're just passionate about kind of that concept that we talked about, Bronson, where, most of the time people think, hey, if I want to make some extra money, I want to send my kids to private school, I want to take a nice vacation with the family, I want to make some extra money. The only way to do that is trade more time for money, to take that promotion. And you may need to do that. Maybe you decide, but another way is to put your money to work for you. And we're both passionate about passively investing in commercial real estate. And so that's kind of what that free ebook is. Just tell people about that. Hopefully that they learn that, okay, maybe if I could save up some money, my money could work for me and I could make money off my money. So I don't have to take that job promotion. I don't have to trade more time for money. So check that out at our website. You can reach us through there. You can sign up to be part of our monthly newsletter and things like that as well.
Awesome. Yeah. So Threefold Investing, it's just Threefold. And what's the website again? It's
REI as in real estate investing. So just Threefold REI.
Threefold REI. Okay. All spelled out.
Yep.
Awesome. Cool. Well, Lee, I really appreciate you coming on today. And I know this will bring a lot of value to a lot of people, but we'll look forward to connecting with you here soon.
You as well. Thanks, Bronson.
Thanks. Okay. So I love hearing these stories. I don't know if you like them as much as I do, but I really love the idea of being able to create the life that you want, right? If you are working too much and you don't like your job, or you're just like, I want to spend more time with family, or I want to travel more. Well, you can create that. And how you create that is you look at what is your number, right? What is the rat race number that will cover your expenses? Now, if you live really extravagantly, if you have a high-end lifestyle, that might be a little harder. But again, a lot of people, and you may be in this boat as well, be making a lot of money, but you're spending a lot of money. So if you can just really get your expenses to a modest level and say, what do I need to live comfortably on, where I'm doing things I like to do? And, for me, I realized it wasn't as high as what I thought it might be. And I didn't have to use all the money. I could actually take the money in addition to what I was spending on expenses and just invest that. And I could continually invest that. And that becomes like a snowball that allows you to get that passive cash flow. So, and then really, again, I've talked to 1,200 investors over the years. And what I've realized is there's this thing that happens where people go from, I don't know, this sounds kind of weird. Is this even a thing? Or I don't know anybody that does this, or I've heard about, I should do real estate. But then they start getting involved. They start going to events. They start going to meetups. And then they start seeing that, after I've invested in a deal or two or three, after a few years, they start, they see the cash flow, maybe a couple properties have sold. And they say, hey, this really can work. And so what you're really going for is not just the returns, it's the learning, it's the confidence, the skills that hey, I can invest in this, and this is a legitimate thing, that I can get great returns that are better than the stock market without the volatility of the stock market. It doesn't mean there can't be volatility, and I'm not giving you specific advice, but just saying as an asset class, it performs better with less volatility than the stock market. So anyway, I hope you enjoyed this. Check out Lee's stuff. He's a great guy, just really, well-studied, well-spoken. I just really like him a lot for a lot of reasons. So check his stuff out. And thanks for taking the time to educate yourself. It's really half the journey. I also encourage you not only on the side of education, which is like these, episodes, but also to get out to events and talk with people and learn and ask a lot of questions and be curious. If you're curious, you can learn so much. I think it was Aristotle. Maybe it was Socrates. I think it was Socrates said, just the idea of like, I don't know anything. Tell me what you know. And just come with an attitude of just curiosity and being able to ask many questions to learn. And you will learn so much, and you'll be open up to so many new ideas that may absolutely change your life. So thanks for taking the time to educate yourself. We'll look forward to seeing you on the next episode.
You've been listening to the Mailbox Money Podcast. For more free resources, articles, and videos, go to bronsonequity.com. There you can download your copy of the special report the single best investment strategy during and after a pandemic. None of the information shared here is an offer to buy a specific investment, and this is for educational purposes only. Consult your financial, legal, and tax professionals and use your own common sense before making any investment decisions. Thanks for joining us, and be sure to tune in next time for more Mailbox Money.